Hello traders, this is Simon, and in today's video I'll be talking about trade entry with fair value gap (FVG). How can you utilize FVG for trade entry? Before we start, what is FVG? What is fair value gap? Fair value gap is when you have a gap between three consecutive candles, be it bearish candles or bullish candles. Without wasting time, let me show you example. Let's take, for example, look at these two diagrams. Look at the first one. We have three consecutive candles, 1, 2, 3. And if you look closely, you notice that between the first candle and the third candle, there is no space. Look at the wick. The wick of the first candle and the third candle, you understand, overlap each other. You understand? This is what we call a balanced price action. You understand? No space, no inefficiency. But if you take a look at the second diagram, you notice that the candle 1 and candle 3, we have space there. Look at the high of candle 1 and the low of candle 3. There is space between them. So this is what we call fair value gap, imbalance or inefficiency. So this is not a balanced price action, but this is a balanced price action. Let me show you examples on my chart. This is gold on 4-hour time frame. I want you to see what happened here. Look at candle 1, look at candle 2, and look at candle 3. This is the low of candle 1. Look at it. And this is the high of candle 3. Look at it. So this gap you are seeing inside here is called the fair value gap. Look at it. So if you draw it across to the right hand side, you notice that when price return to the fair value gap, look at it. When price return to the fair value gap, it rejected price to the downside. Look at it. So if you have wanted to take entry here, there is this look at this line that I draw. The middle of it is called consequent encroachment according to ICT. So I always like using this consequent encroachment to take my trade. You understand? So I would have taken my trade on the consequent encroachment, then put my stop loss above the high of the first candle. Look at it. Then target maybe 1 to 2 or 1 to 3, as the case may be. This is the first example. Then let me show you another place where fair value gap also happens. Look at, still on gold. If you check candle 1, candle 2, and candle 3, we have a gap there. Look at it. If you draw it across, you notice that market price returned to the fair value gap up to the consequent encroachment. You understand? Tapped into consequent encroachment. That is the middle of the fair value gap, the 50% of the fair value gap. You understand? Market tapped into the 50% and rejected price upward. Let me show you another one. You can find so many of it in on your chart. You just have to backtest and find so many places where it happened on your chart. Look at this one again. Look at this one. Market returned to 50% of the fair value gap. You understand? Let me show you another one before I check. And okay, let me check another pair to show you that it happens everywhere. This is Euro USD. Let's check Euro USD. Okay, look at what happened here. This is the best. This is the one I like taking the most. Look at, market was coming lower low, lower high, and market took out liquidity, this set side liquidity, and price gave us market structure shift here. Look at it. We got market structure shift here, and after market structure shift, The market created a fair value gap. Look at it here. Are you seeing it? Candle 1, candle 2, and candle 3. Look at it. If you draw it across, you notice that market came back for the consequent encroachment of this fair value gap. Look at it. So you would have taken your trade. Look at it here. Then put your stop loss below here and target 1 to 2. Look at it, 1 to 2 here. You understand? But there is another way in which you can utilize this fair value gap to get a better entry by going to a lower time frame. You understand? If I go to 1 hour time frame now, you know that 1 hour is lower than 4 hour time frame. You understand? Look at what happened there. Inside the fair value gap, we also have liquidity sweep. You understand? Liquidity sweep. So let's assume I want to take this trade on 1 hour time frame. After liquidity sweep, market gave us market structure shift here and created a fair value gap again on 1 hour time frame. Look at it. Look at the fair value gap market created. You understand? On 1 hour time frame. So even if you wanted to take this trade on the consequent encroachment, look at it here. Take it here, then your stop loss will be below the manipulation. You understand? Then you go for your 1 to 2. Look at it here. If you need to backtest this because it happens always, almost all the time. It happens. So entry with FVG is very, very powerful. You need to practice it, backtest it. Okay, guys, if you find this video helpful, don't forget to like, share, and subscribe, and turn on the bell notification so that whenever I post videos like this, you'll be notified.